If you think paying a 37% top income tax bracket is the worst thing the government can do to your money, you are completely wrong. Did you know that a new federal law just went into effect where even if your tax liability is exactly 0%, making one simple mistake will cost you a $500 per day fine? There are roughly 32 million small businesses in the US, and recent surveys show that almost 90% of business owners have no idea this law even exists. If you own an LLC, an S-Corp, or any small business, paying attention for the next few minutes could save you thousands of dollars in penalties and up to 2 years in federal prison. Welcome to ClearPath Tax, where we make complicated tax rules completely clear. Today we are talking about a massive new requirement under the Corporate Transparency Act called BOI reporting. This is a new dragnet set by FinCEN, a bureau of the Treasury Department, and your CPA probably forgot to warn you about it. In the past, you could easily set up an LLC, and the federal government did not always know who the true owners were behind closed doors. Now, to crack down on money laundering and tax evasion, the government wants names. If you own 25% or more of a company, or if you have substantial control over it, you are now required by federal law to upload your personal details, including your driver's license or passport, directly to a government database. Let me be clear, this is not a tax payment. It is strictly an information report. But the penalties for ignoring it are absolutely insane. Let us look at the numbers. If you formed your company before 2024, you have until January 1st, 2025 to file this report. If you formed your company in 2024, you only have 90 days from the day it was created. And what happens if you miss that deadline? The federal government will hit you with a $500 penalty for every single day you are late. That penalty caps out at $10,000, and it comes with a threat of up to 2 years in federal prison. The most shocking part is that this fine does not just hit your business. It pierces the corporate veil and hits you personally, meaning your LLC cannot protect you from this debt. But do not panic, because I am not just here to scare you, I am here to help you solve this. First and most importantly, filing this form is 100% free. You just need to go to the official FinCEN website, which I have linked in the description below, and fill out your information. It takes about 10 to 15 minutes. Please be careful, because right now there is a massive wave of scam emails going around from fake companies offering to file your BOI report for $300 or $500. Do not give them a single penny. You can easily do this yourself for free. If you want me to make a step-by-step screen recording video showing you exactly how to fill out the form, drop the word yes in the comments below. If this video just saved you from a massive daily fine, make sure to subscribe to the channel right now and share this video with every friend you know who owns a business. Tax rules are changing fast, and I will be here to keep you ahead of the IRS. See you in the next video. Now that you know how serious this penalty is, we need to talk about the hidden traps inside this law that are catching business owners completely off guard. The rule says anyone with 25% ownership must file, but there is a second, far more dangerous clause. You also have to report anyone who exercises substantial control over the company. This means even if you own absolutely 0% of the business, but you make major decisions, you are on the hook. Substantial control applies to C-suite executives like a CEO, CFO, COO, or even a general manager who has the authority to sign major contracts. If you have a trusted employee running your daily operations and making high-level decisions, they might need to be reported to FinCEN as well. If you fail to include them on your BOI report because they are not technically an owner, you are filing an incomplete report. The federal government treats an incomplete report exactly the same as a missing report, which triggers that same daily fine. But the nightmare does not stop once you hit the submit button. One of the most overlooked details of the Corporate Transparency Act is the ongoing updating requirement. This is not a one-and-done form that you file and forget about for the rest of your life. Whenever any of your reported personal or business information changes, you are legally required to log back into the FinCEN database and update your file within exactly 30 days. Think about how easily this can happen in real life. If you move to a new house and change your residential address, you have 30 days to update FinCEN. If your driver's license expires and you get a new one with a new expiration date, you have 30 days to upload an image of that new ID. If you fail to make these updates within that 30-day window, the grace period ends, and that devastating $500 daily penalty starts ticking all over again. Many people are wondering if there is any way out of this, and the truth is there are 23 specific exemptions to the BOI reporting rule. However, these exemptions were deliberately designed to exclude the average everyday entrepreneur. The businesses that are exempt are typically highly regulated entities like banks, credit unions, insurance companies, and publicly traded companies that already report to the SEC. For the average mom-and-pop shop, real estate investor, or freelance consultant with an LLC, those exemptions simply do not apply. There is only one exemption, that might save a successful small business, and it is called the Large Operating Company Exemption. To qualify for this, your business must meet 3 incredibly strict requirements simultaneously. You must have more than 20 full-time employees directly employed by the company. You must operate from a physical commercial office space in the United States, and you must have reported over $5 million in gross receipts on your previous year's tax return. If you miss even one of those 3 criteria, you must file the BOI report. What about an LLC you opened years ago, never really used, and just forgot to close down? This is where thousands of people will be accidentally penalized. FinCEN does have an exemption for inactive entities, but the rules are brutal. To be considered inactive, the company must have been created before January 1st, 2020. It cannot hold any assets, and it cannot have sent or received more than $1,000 in the last 12 months. If you opened an LLC in 2021 and never used it, it is not exempt, and you still have to file. You might have seen news articles floating around about a federal judge in Alabama ruling that the Corporate Transparency Act is unconstitutional. While it is true that a massive lawsuit was won by the National Small Business Association, that ruling only protects the specific members of that one organization who joined before the lawsuit was filed. For the remaining tens of millions of small business owners across the country, the law is still entirely active, and the Department of Justice is already appealing the decision. This is why playing a waiting game with the Treasury Department is a massive gamble. Many business owners are purposely delaying their filing, hoping the law gets struck down completely before the end of the year. But if the deadline arrives and the law is still standing, millions of people will rush the FinCEN website at the exact same time. If the government servers crash and you are unable to submit your information before midnight, the IRS and FinCEN will not accept website glitches as a valid excuse for being late. The smartest move you can make right now is to gather your documents, log onto the portal, and spend the 15 minutes it takes to secure your compliance. Protect your business, protect your personal bank accounts, and do not give the federal government an easy reason to penalize you. If you found this breakdown helpful, make sure to subscribe to the channel right now so you never miss a critical tax update. Drop a comment below if you are confused about your specific situation, and I will see you in the next video. Another massive trap hidden inside this law specifically targets foreign entrepreneurs who operate businesses in the United States. If you do not live in the US but you registered an LLC in a state like Wyoming or Delaware to run an e-commerce store or consulting business, you are not exempt from this rule. In fact, foreign reporting companies face even more scrutiny. If you do not have a US-issued driver's license or state ID, you are required to upload a clear image of your valid foreign passport. The federal government is aggressively cracking down on foreign-owned shell companies, and ignoring this requirement will immediately flag your business, potentially freezing your US bank accounts, and resulting in the exact same devastating daily fines. For real estate investors or serial entrepreneurs who own 5, 10, or even 20 different LLCs, the thought of manually updating your driver's license across 20 different filings every time you move is completely overwhelming. Thankfully, there is a hidden tool built into the system called a FinCEN identifier. Instead of entering your personal information into every single company report, you can apply for a unique 12-digit FinCEN ID just for yourself. Once you have this number, you simply plug it into all of your different LLC filings. If you ever move or get a new passport, you only have to update your FinCEN ID profile once, and the system automatically updates all of your associated companies at the same time, keeping you perfectly compliant and completely safe from penalties. Perhaps the most terrifying part of this entire situation is that you are essentially completely on your own, and you cannot necessarily rely on your tax professional to handle it for you. Across the country, thousands of CPAs and enrolled agents are strictly refusing to file BOI reports for their clients. Because this is technically a legal compliance issue governed by FinCEN and not a traditional tax return governed by the IRS, many accounting malpractice insurance policies refuse to cover errors made on BOI reports. They view it as the unauthorized practice of law. This means your accountant will likely hand this responsibility right back to you. You cannot afford to assume someone else is taking care of this behind the scenes. It is your business, your personal liability, and your ultimate responsibility to make sure the federal government gets what it demands.